Hi, this is Richard Chamberlain, and welcome back to the Protecting Your Family's Future podcast. This is episode number 40. Today, we're going to be talking about allowing your beneficiaries or a beneficiary to purchase property from your estate. Now, this may come up because there's a particular piece of real estate that you want one of your beneficiaries to have the right to. You want to give them the opportunity to buy it or to have it as part of their distribution, or maybe separate from their distribution, different ways that can come up. And there are different creative ways to do that. There's some really simple ways to do it, but also you can get very creative. Just depends what your goals are. So let's talk about some different scenarios that might come up. Let's say you have a piece of farm ground, and one of your children currently helps you farm the ground, and you want to give them the opportunity to have that as part of their estate because they're the one who farms and the others don't. So you might actually just give them that piece of real estate as part of their distribution. Now, you might want to go back and listen to episode 13, where we talk about different ways, different kinds of specific distributions that you might make. Dealing with specific gifts of real estate is just one of those things. That's what we're going to focus on today. But for general information, go back and listen to episode 13. Now, if you want to give that real estate to that particular beneficiary, you can just say in your will or your trust, I want to leave that piece of property to this person. And you can make it a part of their distribution. So let's say you've got 3 kids and you want to leave everything equally to the 3 of them. You can say 1/3 each, but the share for this child will include this piece of real estate. Now, maybe that piece of real estate is, it doesn't fit into the fractions. That real estate is more than what that 1/3 share would be. Well, then you might want to have that beneficiary have the right to purchase that real estate from the estate. So they basically buy out the other beneficiaries. Now, one of the things that you can do, and we're not talking specifically about farm ground, we're talking about any kind of real estate, whether it's rental property or your home or farm ground, is you might give a beneficiary the right to purchase the property, but give them a discount for how much they pay for that. We had a client just a couple of weeks ago who wanted to give their child the right to buy a piece of property, but because of the work that they had been doing for the parents with respect to that property, they wanted to give a discount. So they said, this child has the right to buy this property from the estate, but the price that they will pay will be 75%. That's just a number that they used. You can use any number that you want. 75% of the actual value at the time that we pass. So an appraiser would go out, appraise the property, and they would have the right to buy the property at 75% of that value. And of course, if you want, you can say that, they have to go out and get a loan, pay the cash, or they can take that out of their share. So they use the money that they would otherwise get from the estate to pay for that. Lots of different ways to do it. There's not one way that's going to be right, but you want to build in the flexibility so that it works for the beneficiary and really all of your beneficiaries, to make sure that your goals are met and you're giving them what you want them to have. So I wanted to talk about this today because I wanted to kind of show you that there are lots of different ways to do these kinds of things. There's not just one way. Be as creative as you want to be so that your plan will truly reflect your particular circumstances, your goals, your family circumstances, and make it yours. So I hope that was helpful for you today. If you have questions about your own estate plan, reach out to us. We're happy to talk to you. And we'll see you next week. Thanks.